Hey, my name's James Nicholson. Welcome to my YouTube channel. In this video, I want to talk about a lender that's actually cutting rates. I've got the 2-year average, the 5-year average as well, what that's doing in the market. It's not looking so great at the moment. In fact, most lenders are increasing rates at the moment. So we'll talk about why that's happening, who this major lender is that's actually cutting rates. That's obviously a positive if you're looking for a new mortgage. Maybe you're already with them and you can swap onto this, or maybe it gives you an option to present to your broker or do a mortgage yourself. So in this video, let's talk about what's happening this week in mortgages. And before we jump into that, if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 50,000 subscribers. In fact, if you have a look around this video, you can see just how close we are. We need about 500 subscribers now to hit it. And by subscribing, you'll get all the latest house price news, interest rate news, property investing tips, and much, much more. And let's get some views on this video because that will help us grow the channel faster. Your part's simple. Smash like, tickle like, do something to that like button. That helps with the YouTube algorithm and that's really helped the channel grow. So thanks to everyone that does that. So there's a lot of uncertainty in the market at the moment. So we had the Federal Reserve last week cutting rates. Positive news. They even said in the meeting they're likely to cut 2 more times in 2025. That means the Bank of England has more of a case to cut rates over here. Very good. But markets aren't reacting well to this data still. And in America, they're punishing them. They want rates to come down quicker, the markets do, because that's going to feed the economy and keep things going. And a lot of people think that the Fed is too slow. In fact, Donald Trump is calling him too late pow, isn't he? So that's not great. And so we'd like to see rates, a lot of people, come down quicker unless you're a saver. Bank of England as well, they're being really slow with their rate cuts. I think they should be ahead of the curve because it's obvious unemployment's going to go up, and that's due to the economy, it's due to AI. There's lots of factors, and it just hasn't felt like we've really got anywhere for the last 5 years. Everyone's been chasing their tail. We haven't had any prosperity for a long, long time. And it will be good to do something to kickstart the economy. Instead of that, all the news at the moment is about the budget, and the budget isn't looking good. It's looking like inheritance tax is going to go up. It's looking like other taxes are going to go up as well. Maybe the cost of stamp duty gets spread over a number of years to kickstart that market. But there's not much positive stuff in the budget. And so because of that, the markets are spooked at the moment. The government are trying to sell some gilts. There's not lots of interest in that if you have a look at that kind of stuff. So the government's trying to sell their government debt and it's not selling as well as you'd hope. That's not a good sign. It means the markets aren't really confident with this government and what the plans are going forward. So the budget is the next biggest thing in our market. With house prices, with stamp duty, with all of this stuff, a lot of it is just going to be now wait and see what happens in November. Might seem like a long time away, but that will come round very, very quickly. And so because of that, the swap rate, the rate that your bank or my bank borrow at, that's had a little uncertainty as of late. It did go up a little bit. It's a bit flatter now. And so because of that, banks, more importantly, the lenders that we borrow at, they're not able to cut rates to us unless they drop their margin. So the 2-year deals at the moment, the 2-year averages have gone up this week. This is from Uswitch. And what this means is that across all lenders, they've increased and the average is higher. So a 2-year average at the moment is now 4.81%. And the 5-year average has also gone up. This has gone up above 5%, 5.03%. That was below 5% last week, so that's not good. So who has bucked the trend here? Well, Halifax have. And Halifax are saying, look, we want some more market share. We want your business because it's slow at the moment. So we'll give you some attractive deals. Come and look at us. And that's what they're doing here. And so they have cut their 5-year deal this week, which is good. And ironically, a lot of people are looking at 5-year deals at the moment. They're the most popular deals in the market at the moment, because if we went back to the summer, a lot of people were jumping on 2-year deals. And that's because it felt like the momentum was, inflation was coming down, interest rates were coming down, the unemployment wasn't going to be as bad as we were expecting, and then it all changed. And so since then, people have now started to move towards 5-year deals. They're the most popular deals because some people, including you guys that watch this, have the belief that maybe rates could go up because inflation could just carry on out of control for a longer period than we were hoping. And if that happens, is there a chance that rates go up? Let me know what you think. Mortgage rates have gone up this week. So your mortgage rate has gone up in most circumstances. So Halifax had a rate last week. It was 3.99%. That was one of the best deals on the market for a 5-year deal. And they've dropped it a smidge this week. Not lots. It's gone down to 3.97%. That's costing them more to do that because their cost of borrowing money has gone up, but they're dropping the rate to you just to get more business. So they're making less margin, but they're fighting NatWest, Nationwide, Santander and everybody else, and they're looking to get more market share, which is good. That's what we want. If the market slows down, we want these lenders to fight over our business and do as much as they can to drive us towards them. And hopefully some others will follow suit. Nationwide, they like to be cheap. Nationwide are one of the biggest lenders in the country, and they will often fight with Halifax. You've got both of them have a house price index. You've got the Halifax house price index and you've got the Nationwide. And Halifax also have other brands. They've got Lloyd's is one of their brands as well. Nationwide have got the Mortgage Works and they've got Virgin Money. So I think we will start to see maybe some other lenders, but I think the majority of lenders until November are going to basically give you a lot more uncertainty. And I wouldn't be surprised if most lenders do a bit more of an increase next week. Hopefully, we get one standout lender that says, you know what, I want some market share. I'm going to go and get that by cutting rates. Let me know what you think in the comments below. If you haven't done, do make sure you grab a copy of our free ebook, Mortgage Secrets. This will teach you how to get a broker and the best time to get a broker, where to find the best brokers. Also teach you about off-market mortgage deals. Think about Direct Line for car insurance. Well, there's lenders that are like that for mortgages. They're not on the comparison sites. They're not with your broker. You should be checking those lenders as well. We list those out in this as well, and just help you streamline and save a ton of money on your mortgage. It doesn't cost anything, so it's well worth grabbing a copy. 2,500 people have already. Do click in the description to grab a copy of that and click in the first comment. Do also check out all the other content as well on the channel, including this video right here.